What is up, everybody? It is I, Carlton Flowers, your crypto pro. Yay! And today we have a very important video. I'm going to need you to limit the distractions and focus for the next 10 minutes or so, because we're going to talk about a topic that really has a lot of people conflicted. So we've got two competing views on the crypto cycle, all right? One view, and you can see a lot of these content creators that are out there who swear they're right. They say that the traditional 4-year cycle is ending. Bull market is over. Bull run is done. We're about to enter a bear market, and they're scaring up people, left and right. And then we got the second view, and that view is talking about how the crypto sector is maturing and that the cycles are lengthening. So we're going to break all of this down. I'm going to give you the details of each viewpoint, and then we're going to cover, I've got 3 factors that could extend the bull market into 2026. And then you can make your own determination by the time you just take all of this into consideration. And I'm not going to tell you, sit right here and say that I know exactly what's going to happen. I'm just going to share with you the facts and then let you draw your own conclusions. And you might be able to tell which way I'm leaning. And then we're going to talk about the risk of following one of the viewpoints or the other viewpoint. Okay, so there's some risk and reward that's going to be balanced out here in this video. So before we jump into all those details, I want to welcome aboard all of the new subscribers. Glad to see you here. 50 people jumping on board since the last couple of videos that we did covering Onyx coin, and the comment section is pretty robust. So go back and check out the videos on Onyx coin if you have not seen them, because it's going to be a topic I'll continue to cover. And then I want to give a shout out to Carl, the Bitcoinio GOAT, who has been the top contributor to the Crypto Pro channel in the last several months with the most super thanks of anyone. So thank you very much, Carl. You the man. That is my guy. Shout out to him. I hope you are doing well. And shout out to the private group. Thank you guys. You know who you are, for your continued support and helping me to finance this whole mess of a thing and keeping these videos pumping out there so I can guide you through the forest while we run through this bull market that I do think is still coming up. Okay, so enough of that. Let's get into the details. Let's talk about the two views. The first view is the traditional 4-year cycle is ending. So we had the Bitcoin halving in March of 2025. And so that was expected to trigger a peak by late 2025. And that would mirror the past cycles. Our 2013 cycle, the 2017 cycle, which is where I jumped on board with crypto. I've been investing since 1999. I have 30 years experience plus in doing TA, and I discovered in 2016 that the TA that I was doing in the stock market works just the same in crypto. It's just math. And then, of course, the 2021 cycle. So those are the 4 cycles, or 3 cycles that I'm aware of that follow the 4-year pattern. Okay, so the analysts at TradingView and Coinpedia note that BTC and ETH have already surged 15%, suggesting that we might be near the top. If it hasn't happened, they're thinking it's going to happen probably in November, and that's plausible, okay? Now, risk assets are cooling down. You guys are seeing it across the board here. And some traders are already rotating into stable coins or shorting altcoins. That's a dangerous thing to do. Okay, so that's the traditional view. That's viewpoint number 1. Now, viewpoint number 2 is this whole idea that the crypto market is maturing. In other words, the cycles are lengthening, all right? No more clean-cut 4-year cycles. It's going to start to get longer. And here's why we have that viewpoint. So you got Forbes and then the Be in Crypto blog site that have posted some articles recently where they argue that 2026 could be a 1999 on steroids. Now, if you don't know about 1999, look it up. That was the Dotcom bubble. And I was trading like a madman on penny stocks and small cap NASDAQ plays. And that's where I cut my teeth on TA. And I made a lot of money in 1999. And then that whole thing came crashing down in the year 2000. So they're saying that 2026 might be similar to the 1999 bubble, okay, with crypto entering a super cycle driven by real world adoption. And this is the real world adoption that we've been talking about since I started this channel. Back in 2017, we were saying one day when we get this real world adoption, and it's not just people that are betting on Bitcoin going up only to sell and make a profit. Real world adoption means they're using it for the use cases that they were created for, like Bitcoin being digital gold. Actually, Bitcoin was not created as a savings method. It was created to be a currency to be spent, but now it has morphed into gold. All right. It's for saving, for setting aside. And then you had people come on the scene like Ethereum, Litecoin, where they created these networks that were intended on being currency for spending. Okay. So that's real world adoption. And then you had ETFs come on board and institutional flows. Okay. Remember when we used to get so excited when the ETFs were being talked about and we were waiting on the government to approve these ETFs? We had Gary Gensler. I called him Gary the Gremlin Gensler, who was standing in the way of ETFs being approved in this country while we watched the world. We watched Canada approve ETFs, Europe approve ETFs, and we thought we were going to be stuck. And we prayed for the day that Gary Gensler would be gone and that the ruthless reign of the Biden administration that was very anti-crypto would come to an end. And sure enough, it did. Okay, so what else do we have here? The S&P Global and Springer Open research show that crypto volatility is converging with the traditional markets like the Dow or the NASDAQ. Those markets operate on a longer cycle. It's a 13-year cycle. I've talked about that in prior videos. For as long as I can remember, the housing market operates on a 13-year cycle of explosive growth and then recession, okay? And what they're saying is that crypto will mature and the 4-year cycle will match this 13-year cycle that all of these other major markets tend to follow, okay? So that is suggesting that crypto might decouple from the rigid 4-year pattern, especially as we integrate with global finance. In other words, we could see major institutions, banks, we could see lending, we could see real estate, buying and selling, we could see money transfer, all of these things happening that normally take place in TradFi or traditional finance. That's going to come over to things like DeFi and crypto, or, we could see the SWIFT system being replaced by a blockchain like cusp, which could actually absorb the volume of the buying and selling that we see on the entire credit card network. Okay. So that's something that really, could happen that would justify that this 13-year cycle is probably on the way for crypto. All right, let's get into the factors. We'll give you the factors and then I'm going to wrap it up and we're going to be done. So here's the 1, 2, 3 factors that could extend the bull market into 2026. And number one is quantitative easing. All right, so analysts at Being Crypto and CoinRank, and I'm going to put some links in the description so you can read these articles yourself. They highlight that QE, quantitative easing, that's where the government starts to put money into the system and increase the circulation of currency. QE historically fuels crypto rallies, like Bitcoin surge from 5,000 all the way up to 60,000 during the 2020 to 2021 bull market, okay? If the Fed pivots back to quantitative easing in 2026 to combat recession fears, liquidity could come flooding into crypto, especially Bitcoin and altcoins, because people see these as hedges to inflation. In other words, you got to put your money into something that will grow with inflation instead of sitting it on the dollar, which loses value every day that the feds are printing money. Number 2, Trump administration policies. Okay, so in 2025, Trump signed the Genius Act. And what that did, it created a federal framework for stable coins and digital assets. We've been waiting for that forever. Instead of the previous administration putting up the roadblocks and Gary Gensler attacking every crypto as he did with, say, Ripple. They were talking about attacking Ethereum and just putting up a roadblock to the development of the crypto market, the maturing of the crypto market. Basically, Gary Gensler was arguing that Ripple, XRP, was a security. And so he's going after all of these cryptos with this crazy thought that they were securities, which they were not. And the definition of a security, it goes back to the early 1900s whenever people were investing into corn futures. And so a security basically means that there's a promise for growth, that if you invest into my corn market, by the time the corn grows and we harvest and we sell it, I'm going to guarantee you so much money. And there's no guarantees in crypto. And so he was erroneously trying to stop the growth of the crypto market by making these accusations that they were securities. And man, oh man, it was so frustrating, like living through all of that. Those of you who have been into crypto since 2017, you know what I'm talking about. Okay, so we've also got the crypto strategic reserve. That's big. And relaxed banking rules, all right? And that is basically something that can institutionalize crypto and boost the demand. So if the United States is setting up a crypto reserve, a strategic crypto reserve, they're believing in the future growth of the whole sector. And they're saying, hey, we need to dump a bunch of money into crypto and hold it because we don't want to be left behind as the world adopts crypto. So conversely, the Biden administration was vilifying crypto. And then our fear was, okay, the world is going to adopt and then the United States does not. And then we're going to end up being way behind the rest of the world because we did not invest into Bitcoin, the digital gold. Okay, so in addition to that, Trump's appointments like Scott Bessent, they lean dovish. And so they're favoring growth and liquidity. And of course, that's going to be bullish for crypto. All right, so the third one is the DXY. So the DXY is the dollar index. Dollar weakness is something that will feed into the possible super cycle. So when you've got a falling US dollar index, the DXY, that correlates with the crypto bull runs, okay? If the DXY goes below $98.50, 98.50, that's where the analysts expect a make or break moment for Bitcoin and altcoins. So once we fail that threshold, that's where the crypto market could explode. So overall, a devaluing dollar could push investors towards scarce digital assets as a hedge. You know, I mentioned that before, crypto as a hedge against inflation. So that could lend to a super cycle. Okay, now let's cover the risks of calling the cycle too early versus staying too long, and then I'll wrap it all up. Now, the folks who think that the crypto bull run is over or about to be over, they're bearish right now. What's the risk of that stance? Well, you could miss out on a huge late stage liquidity rally, okay? But the reward of that is you're locking in your profits right now and you're avoiding the big the bear market. You know, when the prices drop through the floor and then you see your portfolio values go down 80%, 90% like they usually do at the end of every 4-year cycle. Now, what about the bullish into 2026 strategy? What are the risks of following that one? Well, you could have macro tightening. You could have sentiment reversal. If we don't go into quantitative easing, if the DXY stays strong, well, you're going to lose out. But what's the reward? If it works out, you could catch a QE-fueled super cycle that melts faces. It could be like the 1999 technology explosion, the Dotcom bubble, which burst in the year 2000. So, Bearish traders risk missing out on the policy-driven upside, the policies of the Trump administration, if they move into QE, okay? The bullish traders face the risks from the potential of future rate hikes. If Jerome Powell starts to hike those rates, boy, it could get ugly. ETF outflows could hurt the market if people are selling those ETFs, betting that they're going to go down. And then we could also have regulatory shocks if all of a sudden they turn around and they start to crack down on the crypto market like the Biden administration did. Okay, so overall, the evolution of crypto towards the traditional asset market, that means that the cycle timing is no longer purely technical. We can't have these perfect 4-year cut and dry exact predictions of when the bull markets are going to be. So macro liquidity, political policy, and institutional adoption, that's big, guys, are the key drivers here. So whether you lean bearish or bullish the next few months, they are going to tell the story, and they're going to define the shape of crypto's maturity curve. All right. So let me know what you think. Are you betting on the bearish now thought, or are you betting on the prediction that we're going to enter into this great big fat crypto super cycle that's going to happen maybe Q1, Q2 in 2026? I'm kind of leaning towards a Q2 peak. I think that's what we're going to end up seeing, because I just can't go with this thought that we're not going to go into quantitative easing in the spring of 2026. QE, the cycle of recession and where the economy just blows hot, we've seen this cycle happen since the early 1900s. Since the stock market came on board, we see these cycles every 13 years like clockwork. But I'd love to hear what your opinion is, and you definitely want to like, comment, and subscribe. Let me know if you want to hear more overall market reports like this one, and I'll be looking forward to hearing your requests of what you want me to break down as far as TA on different projects. That's all I got for this one, though. This is Carlton, and I am out.